also counting down to Europe's earnings season with 11 Stoxx 600 companies due to report this week. Now, across the pan-European index, analysts expect earnings and revenue to both decline on an annual basis, with earnings seen falling 0.2%. This is according to LSEG data. This marks a significant decline from expectations for 3% earnings growth this quarter back in June. Now, if those projections are accurate, the third quarter would mark the first period of earnings decline since the first quarter of 2024. Now, companies across the utilities, cyclical consumer and basic materials sectors are expected to be the worst performers this quarter. When it comes to consumer stocks, they have seen a particularly steep drop in analyst expectations, with growth of close to 15% forecast by analysts as recently as June. Meanwhile, just 3 sectors are expected to see positive earnings growth. These include industrials, financials, and real estate, which is seen leading the way with growth above 5%. And who best to discuss the upcoming earnings season than Emmanuel, head of European equity strategy at Barclays. Emmanuel, good to see you once again. I'll start by getting your thoughts exactly on what are your main expectations as we approach the European earnings season.
Yeah, good morning, Silvia. Look, I think there is scope for beats because we've seen the usual reset in expectations. As you said, we are looking for the first quarter of negative EPS growth in Europe since Q1 24. Even in the US, if you look at non-tech earnings expectations, they've come down quite a bit. Meanwhile, I think the macro setup was decent in Q3, or at least not worse than expected after the Liberation Day shock. We had PMIs going back up. The US GDP no cluster in the US is growing at 4%. So I think there is scope for beats. I think the conundrum for the market is that obviously stocks have gone up quite a lot and valuations have done the heavy lifting. So you have this tug of war between, on the one hand, pretty low estimates, which give room for beats in my view. But obviously, that's partly expected, and the market has been looking through the earnings noise recently, looking for better days ahead. So I suspect, the stock that missed earnings will be punished, as there is little cushion left given the high valuation, and you will get pretty much quite a bit of dispersion, I would say, and volatility at the single stock level.
Interesting. In the past, at least in this 2025 so far, some of the earnings season have been dominated by the trade tariffs and then the trade agreement between the EU and the US. What do you think will be the most important narrative from European corporates this quarter?
I mean, I think definitely the tariff pass-through will be a focus point. It was too early to really know for sure what was the implication of tariff on margins, on pricing, on consumer demand. A lot of companies talk about tariff as a source of uncertainty, but not many could tell us what it meant for earnings, right? So I think for Q3, we're going to be looking for details, for a bit more insight on what or where those tariffs hit and who is taking basically the hit. Is it the consumer? Is it margins? Is it both? And which sectors or which end markets are the most at risk and which one have pricing to offset the margins? So that's one thing. I think the AI show me the money theme is also quite important. It's been a big driver of market this year, right, and a big source of polarization. So that's something market will be looking for as well in terms of who is starting to monetize AI investment and who is not able to do that yet.